Well, good afternoon, everybody. I'm Rick Edelman. Thanks so much for joining us today for this really fascinating conversation, crypto and the Trump administration. We're going to talk about what the new administration has in store for the world of crypto. We know it's a massive sea change from what we've experienced in the Biden administration, but exactly what does it mean for you, your clients, and the investment recommendations you ought to be making? And figuring it all out for us is Matt Hougan. He's the Chief Investment Officer of Bitwise Asset Management. Matt, join us anytime when you're ready. If you're not familiar uh, with Matt, he is not native to the world of crypto. Matt's background is in what we now call TradFi, the traditional finance marketplace. Matt grew up in the world of ETFs back when nobody knew what an ETF was. Matt was one of the creators of Inside ETFs and ETFs.com, along with our own Don Friedman, the CEO of DACFP. And Matt made the shift over from TradFi relatively early on to the world of crypto. And now the CIO of Bitwise, one of the most important, one of the oldest crypto-only asset managers in the industry. So Matt, really glad that you're with us here today.
Yeah, I'm excited to be here. Good to see you, Rick.
Matt, not everybody is terribly familiar with Bitwise. Why don't you spend a moment before we begin talking about who Bitwise is, what you all do?
Yeah, absolutely. Bitwise is a specialist crypto asset manager. We were founded in 2017, and we've been helping professional investors navigate the opportunities in crypto for 7+ years now through multiple bull and bear markets. We're best known perhaps for creating the world's first and today the largest crypto index fund, the Bitwise 10 Crypto Index Fund. But as you can see from this picture, we also launched one of the largest new Bitcoin ETFs, BITB, which is about $4 billion now. We actually have a suite of 20 products, 20 plus products that help RIAs, institutions, hedge funds, and family offices access the space. We're about 95 people globally, $12 billion in AUM, and really are here to be your guide as a financial advisor to these markets. We help answer questions, we support you with distribution, we support you with research, and we design products that make it easy to tap into this space.
And so, with that, let's launch into the conversation. And by the way, as we engage in this dialogue, you're welcome to join in. Many of you already have. You've submitted questions to me when you registered for this event. If you didn't already do that, or if other questions pop up, just go to the chat box here on Zoom, type in your question there. I'll be curating that as we go. If I see something really cute and clever, I'll toss it off to Matt, who will have no advance notice that I'm doing it. So Matt, we'll start at the beginning. We know, of course, that the Trump administration is the big winner in the election. The Republicans control both chambers in Congress at this point. Donald Trump said he wants to make the United States the crypto capital of the planet, and he's already launched executive orders on crypto. So talk about where we are already, the executive order he's issued, who the winners and losers are going to be, and are we really, the United States, going to be the crypto leader in crypto? And what does that mean if we are?
Yeah, absolutely. Great question, Rick. I think the place to start really is to help people understand how challenging it was under the prior administration. And I'll give you a simple story way back from Bitwise's earliest days. When we first raised venture capital in the space, Rick, we had some of the leading venture capital firms in the world, Khosla, General Catalyst, Kraft, et cetera. And we raised a few $1 million to hire Americans to build an asset manager in a legal space. When we went around to deposit those checks to banks, banks wouldn't take them. No one would bank a crypto-focused company. And I just want to ask people to put themselves in your shoes where you have millions of dollars trying to deposit it to hire people, and banks literally won't interact with you. That was the regulatory climate we were in. And that sort of suffused everything. Try to launch an ETF at the SEC. We did 30+ meetings and only got there thanks to Grayscale suing the SEC and prevailing in court. Try to launch a new crypto project and you'll be told, we can't tell you if that's allowed or not. But if it's not allowed, you'll be prosecuted and subject to jail and potentially fines as well. So it was an extraordinarily hostile administration. The new administration has a different view, which is that crypto is a disruptive technology that can be positive for the world and that should be grown here in the US. So what have they done so far? They've ended sort of the SEC's lawfare against the crypto industry, which has been a major challenge, right? If you were in the crypto space, you probably encountered subpoenas or lawsuits that distracted you from building your business. They reversed SAB 121, which was probably the silliest accounting bulletin the SEC has ever put forth. All it did was make it impossible for large banks to custody crypto, which meant that if you were custodying crypto, you had to deal with startups or crypto native firms, which are great at this. But obviously, if you're trying to protect American investors, you want the largest firms in this space competing in this space to raise the bar on quality and drive down costs. But they couldn't under the prior administration. That's been reversed. And then you mentioned this executive order, which covered a lot of things. It covered the fundamental rights, guaranteed the fundamental rights to hold crypto and to build applications in this space without it putting you at personal risk of being found guilty of a crime just for doing that. It said that stablecoins and the development of stablecoins were a national priority for the US because it can support exporting dollars, it can exporting US financial infrastructure. They want to see that grow. It talked about potentially building a US strategic Bitcoin reserve or a US strategic crypto stockpile to hold crypto assets. And most importantly, it laid out the path to develop a regulatory framework so that crypto can come into the light, so that we can separate good projects from bad projects, so that large institutions can build on blockchain-based technology to build the financial future of how finance should work in America. And I think you're going to see, I mean, we've said it before, I think you're going to see a golden age of crypto. I think you're going to see a flowering of real-world applications. I think in a few years, everyone is going to be using crypto-based applications in their day-to-day life. And I do think a lot of that will take place in America because this is still the largest, best market in the world with the best technologists. And yeah, I think it's going to succeed.
That doesn't suggest, though, that it's going to be a straight line from here to there. Likely to be bumps, unexpected events.
Yeah.
What do you think it's going to be? I think a lot of folks were just assuming, Matt, my point is that they're expecting a light switch. Oh, good, Trump's elected. Bitcoin is therefore a million. So talk about the reality of getting from here to the vision you've just described.
Yeah, it's so much slower than that. I think that's absolutely right. If you look at sort of the negative market sentiment, particularly around things like Ethereum or Solana, it's like, all right, already, it's been 3 weeks. Why isn't the world tokenized? And that's just
Are we there yet?
Yeah, exactly. Let's look at what the executive order actually said. It said a professional crypto working group, which includes many of the secretaries, et cetera, some of the largest people in Washington, has 180 days to come up with a regulatory framework for crypto. And then after that, that regulatory framework, assuming it's fully baked, has to pass through Congress and then has to be put in place. And then the industry has to adapt to it. And then large financial firms have to build on top of that. Washington is moving faster than it has in the past, but Washington doesn't move at the speed of crypto, right? The seeds that we're sowing today will show up in new applications and user growth probably in 2 to 3 years. Now you're seeing some early returns. Stablecoin AUM is at all-time highs. You're seeing novel projects. Just last week, Ondo Finance, a blockchain-based solution, said it was tokenizing US stocks to make them available to people everywhere around the world, 24/7, 365. Those sorts of things wouldn't be happening absent this. But we need to wait for this working group to propose a regulatory framework. We need to see what that framework is and agree with it. We need it to pass through Congress. This is a multi-year market. What that means for investors is, who knows what happens over the next 6 months, right? Retail sentiment in crypto is at its lowest level in multiple years. There's actually despair in retail crypto because Ethereum's only up 2% over the last year, and that's a disaster. But for long-term investors, it gives them a window to allocate to the space before prices run away. I do think we'll work up in 2 to 4 years, and crypto will be a $10 trillion market, and people will wonder what happened. But for the time being, this disconnect between impatience and the reality of DC is creating opportunity for investors, and I think that's pretty exciting.
And just to put that into context, if you think crypto is going to be a $10 trillion market, today it's around three.
That's
So
right.
you're talking about a 3x increase over the next 5, 10 years.
Even sooner than that, I think within the next couple of years. I think it's if you think about how much progress crypto made over the last 4 years, going from sub-trillion to about $3 trillion, despite this massive headwind. And then you turn it not just neutral, but to a tailwind. I think we could get to that $10 trillion level within the next 4 years. I think that's totally within frame.
So let's talk about that path to allocation, because that's really what it all comes down to. Until people are actually investing in these assets, the prices aren't going to materially move. And that's assuming nobody sells in the meantime. And the big eye is now on institutional investors because they have to date largely not been engaging. Very few pension funds and endowments compared to the total universe. And virtually, I don't think there's any Fortune 500 company that's got Bitcoin in its treasury reserve. I mean, Michael Saylor's doing his best to persuade them, but nobody yet has said yes. And so everybody's got their eye on these institutions because of the $70 trillion that they manage. And if they begin to allocate, that will move the needle in a material way. So, how long is it going to take for that to happen? I think people are a little Pollyanna into thinking that it's going to happen like immediately.
Yeah. It again, it takes so much longer than people expect. Let's imagine you were an institution that saw the Bitcoin ETFs launch a year ago and you were like, this is very exciting. Let's get these on the docket. In Bitwise experience, our average investor takes 10 meetings before they allocate to Bitcoin. Let's say this institution does a meeting every quarter. That's 2.5 years, right? They're 1 year in, Rick, and this is if you moved on day one, and not everyone moved on day one. So that's the kind of time frame you have to think about. And I would add to that, it's probably longer than that because they probably dip their toe in the water and then they add more exposure, etc. What that tells me again is this is a multi-year bull market. The other thing I would call out, you mentioned $70 trillion. I think those people are eventually going to have 5% of their portfolios in crypto. That's $3.5 trillion. That's more than the total market cap today. Think about that much money trying to flood into this space, right? I think that's what you're going to see. Even though the spigots are only open a little bit so far this year, ETFs have bought about 40,000 Bitcoin. Corporations have bought about 50,000 Bitcoin. The Bitcoin network has produced about 18,000 Bitcoin. So even though we're only open this much, it's 90,000 Bitcoin of demand against 18,000 Bitcoin of supply. When you think about that $70 trillion finally getting their taps on, I think people underestimate the scale of the impact.
But it raises the question of when should I bother allocating? Do
Yeah.
I wait to see all of these flows begin to emerge? Do I wait to see the headlines that banks are now custodying and trading for customers, that institutions, endowments, pension funds are now approving allocations? Do I sit back and wait for a couple of years if you're saying it's going to take a few years? Or do I act sooner than that in anticipation of it?
Well, I think you should act sooner than that, Rick. Look, the reality is we don't know when this will play out. We don't know when the tipping point will be exactly or when the price will start pricing these things in. And you're not talking about a very large allocation. I don't care how optimistic you are about US stocks or US bonds. If you take 2% of your portfolio out of that and invest it in crypto and it returns zero, you won't notice the difference on your cumulative return. Even if it falls 30 or 40%, you won't notice the difference. But if you miss this sort of once in a lifetime opportunity to see a new asset class emerge, you will definitely feel that difference. And your clients will ask you, why didn't you allocate to this? I'll say, Rick, until November of this year, I think you had a good reason to say why I didn't allocate to it. Regulators were actively hostile. You could worry about the government trying to shut down crypto. That's been removed. Now you're looking at the space and saying Ray Dalio is allocating, and Stan Druckenmiller is allocating, and Emory University is allocating, and there are all these early signals. Are you sure you want to be on zero? So I think starting an allocation now, maybe building it up over time, maybe dollar cost averaging, maybe something like that to smooth the behavioral risk is going to be the smart strategy for many people.
Let's talk about one other potential elephant in the room that could affect prices in a big way, and that is President Trump's proposal to create a Bitcoin strategic reserve. Talk about that.
Yeah, well, there are two variations of this proposal. One is for him not to sell the 220,000 Bitcoin or whatever it is that the US government already holds.
Yeah, let's stop right there for a second because most people don't realize the United States is the second largest owner of Bitcoin in the world.
That's
Um,
right.
so talk about how that happened and why nobody knows it.
Yeah, and it's a hodler, right? It acquired this Bitcoin from the Silk Road seizures back in 2014. And that process has been winding through various legal systems. But right now, yeah, the US owns, 220-ish thousand Bitcoin. And there's always been this assumption that it would one day sell these. And I think with the Trump administration in place, that's off the table. I think there's a very low chance, and it's priced into the market, that they will not sell the existing Bitcoin that they hold. And that's a pretty strong statement, right? If you're going to hold Bitcoin, you don't think it's an existential threat that should be destroyed. And so I think removing the worry that the US government just wants to destroy this market is really important. What's not priced in is the proposal we've seen from Senator Lummis and others that the US go into the market and buy 1 million Bitcoin. There's actually a proposed law in Congress that would call on the US to buy 200,000 Bitcoin every year for 5 years while it builds a 1 million Bitcoin stash. That may sound ridiculous, but the US has been holding significant reserves of gold for a very long time. It could sell some of those gold and diversify in Bitcoin. That doesn't seem like a crazy idea. If the US goes into the market and buys 1 million Bitcoin, so will the UK, so will Europe, so will Russia, so will China, so will every other nation on earth. I don't think
A lot of them already are. They're in anticipation of this. They're already beginning to move.
we've had conversations with multiple sovereigns at Bitwise, right? Just at Bitwise, with people thinking about how this game theory will play out. I will say, Rick, if this happens, I think Bitcoin moves aggressively, to $500,000 or more almost overnight. You've even had Larry Fink, CEO of BlackRock, not one for outlandish price targets, say that if there's a adoption of Bitcoin as a strategic reserve, you're talking about $700,000 Bitcoin. And the crazy thing is this could happen. It could happen later today. It could happen tomorrow. To get back to your question of when to position in this market, you have no control or knowledge over when or if this positive catalyst will occur. But if it does occur, I can guarantee you will be too late if you have a 0% exposure beforehand.
So I recently wrote a white paper on the six big myths that are keeping people out today. And in one of them has to do with the fact that people fear it's too late. Bitcoin's already 100,000 and boy, I blew it. I wished I'd invested before. In fact, we've just posted into the chat room the paper that you can download. But there's one little set of math that I did. I want your reaction to this, Matt, is that I just look at two different portfolios, a 60-40 versus a portfolio that has, an allocation of Bitcoin. And I said, worst case scenario, totally worst case, you put 5% of your money into Bitcoin. Now, that's a high allocation for most people who do it, right? They're doing 2 or 3. Let's assume 5%, and let's further assume Bitcoin becomes worthless. Over 10 years, instead of earning 7% a year, which you get out of a 60-40, you would end up at 6.7. Who cares? Even if Bitcoin collapses to worthlessness, it's not that big a deal. But to your point, if it grows the way it potentially can, we're talking about material increases in wealth. What do you think of all that?
I think that's exactly right. It's an asymmetric bet. And I would argue that the risk of Bitcoin going to zero has been severely diminished. So even that downside, I think, is virtually significantly diminished from where it was before. I don't think it's early at all. I think I think Bitcoin is gold for the digital age. And I think until Bitcoin is as valuable as gold, which is about 9 times higher than it is today, you're still early. And I think Bitcoin is more functionally useful than gold as a monetary asset and will gain additional use. So I think it has room to run above that. But you can't be early when most financial advisors own 0% Bitcoin. You can't be early when most institutions still own 0% Bitcoin. I don't think that will be true in 4 years. but it is true today. So I don't think you've missed the boat. I actually think this is the best risk-adjusted time to buy Bitcoin in its history. And eventually you will have missed the boat. Eventually you will be too late, but you're not too late today.
So it begs the next question of the rising tide scenario. The world is more than just Bitcoin. We've been referring to Bitcoin largely as a proxy for the phrase crypto. Is this something that investors and advisors should be focusing exclusively on Bitcoin, or are there other digital assets that also ought to be considered?
I think you need a complete crypto portfolio, right? I don't see a major reason to treat this any different than you do any other asset class. You wouldn't, well, some people did, but you wouldn't put 100% of your portfolio into NVIDIA because you want a diversified exposure to US stocks. You wouldn't put 100% of your bond portfolio in Ford bonds because who knows what happens to Ford specifically. I think you don't want 100% of your crypto exposure in any one asset. I think a diversified bet is probably the right way to do it. I think you probably want to own both crypto assets and equities building in this space because you want exposure to things like stable coins and the growth of trading. So I think the default starting position would be something like an index-based approach or owning Bitcoin and ETH and a few other assets and a small sliver of equities. And that should be the base case. You should only deviate from that if you have a very specific view, Rick, because it's so early in the development. It's really hard. All the same reasons we index in equities are true in crypto, but just multiplied 10x by the level of uncertainty.
It's hard to really say who the winners are going to be long term. We have to point ourselves to the automotive industry, which in 1920 there were 200 of them in the U.S., and today there are 3 or 4. The aviation industry coming out of World War II, Pan Am and Eastern were the biggest. Better to bet on the industry as opposed to the specific player, and that argues for diversification. Like you said, Matt, there's nothing new about that. What fascinates me is how often people try to treat Bitcoin and crypto as different from every other investment strategy they have ever engaged in. It's just another asset class. Treat it the way Markowitz taught you to.
This is so very true. That this time it's different curse for crypto is immense. Yeah, I don't see why, again, people may have specific views. You may be worried about dollar debasement and only care about Bitcoin. You may be really excited about one asset, the other. That's fine. But the base case should be just own the market. That's worked every time. And I think it will work in crypto again.
So let's talk about Congress a little bit. You'd mentioned that Senator Cynthia Lummis has already put forth a bill to get the strategic reserve into place, but I don't think most people are expecting that to be the first piece of legislation. We're looking at stablecoins. Are you in the camp that agrees that stablecoin laws will probably be the first?
Stablecoin laws will be the first because it's a slam dunk. There's bipartisan support for it, right? Everyone loves it. It helps the US issue more debt, which we love to do because stablecoins buy US treasuries, and that's great. China isn't buying US treasuries. We need a new buyer. So stablecoins are going to be one of those. It exports the dollar to emerging and foreign countries because they can use stablecoins to conduct financial transactions much easier than they can tap into US central banks. So it's a win-win for America, and it's good for crypto. And Wall Street wants it because Tether, the largest stablecoin issuer, makes more money than Goldman Sachs, and Goldman Sachs doesn't like that. So they're going to want in on the game too. So I just think there's overwhelming support for stablecoin legislation. I think we'll see it, and I think it will kick off a stablecoin boom that is very significant.
It is the low-hanging fruit. I mean, because it has no volatility in theory. So it eliminates that whole speculative element to it. It's kind of more, I think, more in common with a money market account than a stock. And so I think you're right. It's easy to legislate. Even Maxine Waters has put forth a bill to legislate crypto.
Everyone loves it. It lowers the barrier of entry to banking. It lowers fees for the least wealthy Americans in terms of accessing payments or check cashing. It's just like it's a win across the board. There's no criticism of it. So I think now that we have an open-minded Washington, I think it's a no-brainer, and I think it'll happen soon.
And it will just lay down the couple of basic rules we all want: transparency of its holdings, certainty that it is in fact backed one to treasuries, whatever it is they're saying it's backed to, with full disclosure of fees and expenses, and what's not to love from a consumer protection perspective in that regard. But take a step back, Matt. A lot of folks still don't understand what's the point of a stable coin. I mean,
Mm,
why do we need them? What's the whole? They don't pay any interest, so why
yeah.
why why are people buying them? And like you said, the assets are at an all-time high. What is it now? 400 billion now in stable coins?
Yeah, it's soaring. So they're used within the crypto economy if you want to trade out of Bitcoin, but you don't want to move money to your bank, which takes multiple days and their fees. You can park them in stable coins to hold the value. But what I'm really excited about are two real world applications, one in the US and one internationally. So in the US, something that frustrates me because I'm an efficiency guy, as you know, is that Visa labels a 2% fee on every transaction we have, and debit cards come with a 30-cent fee plus a variable fee. And money should move with text. I don't spend, a dollar every time I send you a text. There's no reason why money has to have these burdensome fees on top of them. And if we get stablecoin legislation and stablecoins can be used for payments, I think we could see retailers across the world let you pay with stable coins and save that 2% fee directly. I think it could reduce costs, increase margins for challenged industries like restaurants, et cetera. And I don't know, that 2% fee just frustrates the heck out of me. So I can't wait for it to go away. And then internationally, if you're not in the US, you have much worse financial rails than we have here. You're paying higher fees to move money. It takes more time. There's a huge amount of corruption. If you have stable coins that are regulated and you're in Latin America or you're in sub-Saharan Africa, you can use effectively US quality financial rails to move money in a stable currency across borders or within your country. That's a game changer. And there's really dramatic use of stable coins even today in sub-Saharan Africa through a project called Yellow Coin, which is really reducing the fees for transactions. In Latin America, where there's huge growth because people want dollar assets, we're hugely privileged here to have a pretty good financial system and a pretty good currency. And we forget that there's, $7 billion, 7 billion people who don't have that privilege, and stablecoins gives them that opportunity. So I think it's a win both domestically and internationally. And yeah, I think it's just a no-brainer.
But is that a completely separate and distinct conversation from Bitcoin? In other words, if somebody uses stable coins for the reasons you've cited, what does that have to do with Bitcoin? Anything?
Yeah, what it has to do with crypto is that stablecoins are issued and move on blockchain-based rails. So they're issued on Ethereum and they move over Ethereum and layer 2 networks. So growth in stablecoin demand directly benefits blockchains like Ethereum. I also think it normalizes this concept of digital assets because you need a wallet to interact with them. So to the extent that we get a billion new people operating on chain, do I think some of them will end up interested in Bitcoin as well? I absolutely do. It removes that last mile gap to getting people on chain. And just everything in crypto's history suggests when you do that, some of them end up parking money in Bitcoin, which is the native currency of this environment. So I think it's good for Bitcoin. I think it's good for Ethereum. I think it's good for the world.
So, having said that, what sectors do you see as generating the most growth over the next several years within the
Within
world of crypto?
crypto,
Yeah.
yeah. Look, I'm bullish across the board. As mentioned, I think Bitcoin is undervalued by a large factor. At Bitwise, we think it's going to hit $1 million in a coin by 2029. So I think it's on a tremendous trajectory of growth. Right now, I think these programmable blockchains across Ethereum, Solana, Aptos, Sui, all of these competitors are probably undervalued by the market because you're not seeing a dramatic uptick in use yet, even though we're seeing a dramatic change in regulation and opportunity. And so retail investors are soured on these assets. Ethereum's only up 2% over the last year. Bitcoin's up 95%. And I think the reason is we haven't seen the payoff of this regulatory change yet. So I think that's enormously exciting. And then I honestly think DeFi as a sector is probably undervalued because DeFi has so far been restricted to crypto-only applications and the crypto-only market by regulation. But it's proven that it can be a much more efficient financial infrastructure. And I think over the next few years, it's going to be freed to compete with traditional finance. And I think it's going to win. So I think DeFi is an attractive area to look at right now as well.
Talk about fraud. That has been the Achilles heel of this industry all the way back Silk Road and Mt. Gox, and most recently FTX.
Yeah.
This is what continues to cause people to be negative or skeptical and fearful about all this. So talk about how the status of fraud. Might we improve it? Is it anything going to make it worse?
Yeah, we're definitely going to improve it. I mean, here's the craziest fact that I can think of. If you think about the last administration, Coinbase, a regulated, publicly traded company in the US with a decade-long track record of serving investors well, was sued by the SEC and aggressively pursued in court by multiple agencies. FTX, the largest financial fraud of all time, faced no legal or regulatory action until it imploded and destroyed the lives of a huge number of people. When you refuse to regulate an industry, what happens is that fraud increases. What regulatory clarity does is reduce fraud. And so my strong hope is what we see out of the new administration and new rules is not a wild, wild west, but rather regulatory clarity that helps people separate the good actors from the bad actors. What we've had so far is sort of a no look, no hear, no speak approach to regulating this space. And that just allows, bad things to thrive in the shadows. We need sunlight, we need smart regulation, and I think we'll see a reduction in fraud over time. But it is something to keep an eye on. If we get wild, wild west, I think that'll be challenging for crypto. And there is that risk that we'll see that. But I hope it's not what we see, Rick.
We've gotten lots of questions from folks attending this. If you have any that you want to post in right now, just go to the chat box in Zoom. One question we had from one of our attendees today, Matt, regards President Trump's trade war that many are fearing is coming, his tariff announcements, et cetera. Talk about how you feel a trade war might impact the crypto markets.
Yeah, I think you have to think about whether it's a tactic or a strategy. If you think it's a strategy that long-term he imagines a fortress America with large tariffs, then I do think that's probably inflationary, and I do think that's probably challenging for rates, and therefore I think it's challenging for risk assets. So I think there's the potential for negative risk. If you think what the Trump administration is actually trying to do is lower the value of the dollar, because that makes U.S. manufacturing more competitive, and lower long-term interest rates, and that the trade war is a tactic to get to that end, to force people to the negotiating table, and that's hugely good for crypto. I personally think that there are a little bit of elements of both, but mostly I think it's a tactic to drive that other outcome. I think what Trump wants is a weaker dollar, a stronger U.S. manufacturing base, and I think that is probably net beneficial for crypto, which thrives in weak dollar environments. But you have to accept the risk that there could be short-term inflation, which would keep rates higher than they otherwise would be, which would be a headwind. So it sort of depends on your view of what's going to happen long-term.
Well, that should that occur, that's not just a negative for crypto. That's pretty much a negative for every asset, isn't it?
That's
Stock
a
market.
negative for every asset. Absolutely right. And I would say that I think the crypto specific factors are strong enough to overcome any macro headwinds. Historically, macro has been the primary driver of crypto in many situations. Right now, I think sort of the positive regulatory changes are more important than what's happening from a rates perspective. But you're absolutely right. If we get this high inflation environment, high rate environment, that's going to be challenging for everything. Stocks, bonds, other risk assets. I still think crypto will be a shelter from that storm because of the crypto native factors. But, I'm not Pollyanna. That would definitely be a headwind for all risk assets.
Another attendee asking about taxes and the notion that President Trump wants to strongly support crypto. He could game the system, so to speak, by giving crypto lower tax rates or no tax rates. Do you see that in the cards?
I think it's a possibility, which sounds amazing to say because because it sounds outlandish, but you have seen other countries reduce crypto taxes for certain amounts of crypto holdings or crypto held over a certain period of time, with the idea that if you want it to be any element of a currency, it can't have a capital gains impact every time you move crypto. So I think that's a low probability, high impact event, right? Unfortunately, we're in a world where there are a number of low probability, high impact events in crypto. When I look at those, they're almost all biased on the positive side. In other words, if we get a strategic reserve and we buy 1 million Bitcoin, low probability, high impact. If we remove taxes on crypto, low probability, high impact. I don't see many that are biased on the negative side, right? There may be a few we can point to, but most of them are biased on this upside potential, and that's how I like to sort of keep them in mind.
So I wouldn't bet on it happening certainly in this tax year.
No, I wouldn't bet on it happening in this tax year. I'd still set aside for those gains that you realize.
We have a couple of questions specifically about the company, Matt. One, is Bitwise planning to offer a fund investing in XRP?
So Bitwise has filed for an XRP ETP, and I can't speak more about the filing because you're in the quiet period as an issuer. But we expect to offer a large number of crypto asset ETPs. We think ETPs are a great vehicle for accessing the space.
And let's elaborate on ETP versus ETF because not everybody's familiar.
Oh man, it's a nightmare. As you remember, Rick, I used to help run ETF.com, so I'm very personally biased on this space. ETF stands for Exchange Traded Fund, and fund signals in the mind of some products that are registered under the 1940 Act, which covers effectively equities. Crypto asset ETPs like Bitcoin and Ethereum are registered under the 1933 Act, and we've been told by regulators to refer to them as ETPs. It sticks in my craw, Rick, because gold ETFs are also registered under the 1933 Act, and somehow they aren't required to meet this same standard. So there is unequal treatment, anti-crypto. Hopefully that will change over time. But yes, I'm very careful to use the word ETP because I have a lawyer that sits on my shoulder at all times and whispers in my ear.
ETP meaning exchange traded product, because there's more than funds that you can have notes, exchange traded notes, for example, which are very popular in Germany for some weird reason. So yeah, I share, the way I've phrased it to folks is that, all dogs are animals, not all animals are dogs. All ETFs are ETPs, not all ETPs are ETFs.
Well said. Yeah, exactly.
And nobody cares except lawyers.
That is right. Yes.
So, another question, how can we make, and this is an advisor asking who deals with this market, the endowment market, how can we make universities aware of Bitwise's services?
Oh, amazing. So reach out to us. We love to go in and speak with universities and endowments and institutions. We have a whole mechanism and team that's engaged around that. So to the extent that you're communicating with one that would love to talk to a firm like Bitwise, a crypto native asset manager, reach out to us, reach out to me, matt@bitwiseinvestments.com. And I'd love to take those meetings.
This was inevitable, so we have to talk about it. What was your reaction to Trump's new Trump meme coin?
Negative. Look, the problem with many meme coins, not all of them, and we can talk about some of the OG meme coins and how they're different, Rick, which I know is challenging, but is that they're short-term pump and dump schemes with significant insider holdings. And I do think if you look at things like Trump or Melania, I think they're largely ephemeral schemes. And I think the insider ownership and planning is not as clear to investors as I wish it were. So I think it's mostly a distraction. As an investor, there were a few things to take away from that, though, that I think are real insights. For one, it was issued on Solana. Solana, as a blockchain, has faced incredible threats from the SEC, which is labeled it a security, and yet the president of the United States had a meme coin issued on Solana. There's probably some signal in that noise, whether you invest in Trump coin or not. And the second is that Solana didn't break. So when it was issued, there was a huge amount of trading volume, a huge amount of movement into the Solana ecosystem. It's like the world's best stress test for Solana. And I think there's actually some signal in that noise as well. So I've no interest in investing in Trump coin, but I think there are things to learn in the Trump coin experience if you're paying close attention. And I think that's often what you have to do in this market is look past the headline to what the underlying truth is.
So other questions are coming in. One pertains, you'd mentioned that you've filed for XRP, and you already have an Ethereum ETF. What about Solana?
Yeah, same story as XRP, Rick. Bitwise has had a filing in that space. I can't talk about it specifically, but we're intent on offering high quality, low cost ETPs in the most attractive crypto assets. And we've done that with a few filings so far, and we'll continue to look at that space.
And one is asking about fees. So just generally speaking, these ETF fees are?
Well, I mean, our Bitcoin and Ethereum ETFs are 20 basis points, 0.20%, which for what it's worth, 20% cheaper than Fidelity and BlackRock. So we like to deliver efficiency in the ETP wrapper.
And one is asking about BITW. You've talked in the past about willingness to convert it to an ETF. Any news on that?
Yeah, we filed to uplist it to an ETF, and I hope that that will happen. I think the new administration and the new SEC will be more receptive to that. But we can't guarantee if or when that will happen, but we can tell you that we're actively pursuing it, and there is a filing at the SEC on that.
Would that require, would you guess, a change in the makeup of the assets of the fund in order to win that approval?
It could. It's unknown exactly what assets would qualify for inclusion in that space or what their weighting must necessarily be. So we're open to being flexible on that. The short answer is we just don't know. Important to note, the SEC is operating under an acting chairman while Paul Atkins waits Senate confirmation. So there's still a lot of uncertainty in the SEC space, even though it's moving in a good direction.
We've talked about the potential of a federal government Bitcoin strategic reserve. Peter's asking, what about the states? There are about a half a dozen of them that have bills pending to have them create reserves too. Matt, what do you think of those?
Yeah, the incredible thing is this is happening in a decentralized fashion. I saw earlier today that Florida was talking about $1.5 billion investment into Bitcoin. You're seeing sovereign wealth funds in the US at the state level, at the federal level, at other countries move into this space. I think people are hungry for a non-fiat monetary asset to anchor their real return in, and it's happening at an incredible pace. Anthony Scaramucci described it as a decentralized Bretton Woods. I don't think that's a terrible turn of phrase, and it's wonderful to see these states moving forward.
We've got two questions that are kind of similar. I'm going to ask them right in a row here from advisors who are struggling for the same reason. One says, my CPA and his firm recommend against buying crypto. Please help.
Yeah, reach out to us. Absolutely. We work with folks like that all the time on overcoming objections. It depends on what their specific objection is, but you can rest assured there were thousands of advisors out there allocating to this space and helping their clients gain exposure. And there's strong arguments to be made on why that can be appropriate for some, not all, but some investors. So reach out to Bitwise. We'd be happy to help work through that process.
And let me add just my 2 cents. If this is truly your accountant, tell him to focus on accounting and not investment management because he doesn't know what he's talking about. Second one is this one, Matt. My firm has a do not allocate policy for crypto. Do you have any recommendations for how I can allocate without clashing with compliance?
Yeah, actually, we find a lot of people who can't allocate to spot crypto assets choose to allocate to crypto equities. So Bitwise has a crypto equity ETF, for example, BITQ, which has about a 0.85 correlation to Bitcoin itself. This is Bitcoin miners. These are companies like Coinbase, companies like MicroStrategy, companies like Galaxy that are operating and building in this space. So if you're prevented from allocating to crypto assets, these are just stocks. And it's hard to prevent you from allocating to stocks. And I think that would be a good place to look to get this kind of exposure.
What advice do you have for educating nonprofits on the importance of including crypto in their allocations?
Yeah, I mean, I would start. We have some great white papers at bitwiseinvestments.com, the case for crypto and institutional portfolios, which really shows what the impact of a 1, 2.5, 5% allocation to crypto can have over long periods of time. I think starting with some good credentialed academic style work that shows that this is not crazy, that many of the smartest institutions and hedge funds and financial advisors and family offices are allocating to the space, and that the data shows historically it's boosted your Sharpe ratio. It hasn't significantly impacted your volatility. I think that's a strong space. I'd also say, again, I know I sound like a broken record, but reach out to us at Bitwise. We'd love to come have those meetings with you and help bring people on board.
We've got three questions, all the same genre. One refers to, actually, two of these refer to the fact that Trump, for all of his support of crypto, is only going to be in office for 4 years, and they're looking long term. So, what's the long term risk of crypto if this change in political leadership has made such a difference from Biden to Trump? What might happen Trump to his successor in 4 years?
Yeah, it's a really great question and a really important question. My view is that you'll have proof of impact, to steal a crypto-like term, over the next 4 years, demonstrating how crypto can be positive for the world. We talked about removing that 2% fee that Visa charges. That's a hugely progressive impact. We've talked about reducing barriers to accessing the US financial system. That's a hugely progressive impact. I think there'll be a billion real world apps that people are using they don't want to give up. And I think that will help us keep on the right side. It's important to note, examples from the past, Rick. Remember, Uber launched and was effectively illegal, but gained such widespread popular interest that regulations bent to allow it to continue to happen. I think the same thing is going to happen to crypto over the next few years. I think it's just going to have undeniably positive impact. And so people won't want to reverse that.
I think that already happened in this past election. You have 50 million adults owning Bitcoin and Democrat candidates saying that they hate it, threatening that investment, and they got largely thrown out of office. 58 out of 59 pro-crypto candidates won. So I think you're right. I think that that's exactly what we're going to see a continuation of. And here's the ultimate long-term question. I tackled it in my white paper, but Matt, I want to get your views on this. This is a very big deal, long-term question, the threat to Bitcoin of quantum computing.
Yeah, you do a great job of tackling it in your computer. I jumped ahead in your white paper, so I would encourage people to read that. I think the important thing to realize is the core cryptography that underpins Bitcoin and other crypto assets is the same cryptography that underpins military communications, how the internet works, how point of sale transactions works. It's all built on the same idea. And so if quantum computers jump to steady state basis and can crack RSA cryptography, I'm going to be worried more about the nuclear codes than I am about my Bitcoin. And I love my Bitcoin. I raise that because there's huge work on quantum resistant cryptography. It's going to be adopted throughout the ecosystem, including by blockchains like Bitcoin. And I have every confidence we'll get there before we get these James Bond computers that can be everywhere all at once. And if I'm wrong, God bless us. It's going to be a very challenging environment. And I think I wouldn't worry about Bitcoin in that situation.
Yeah, I think it's quite a ways off in any event. We have more urgent things to worry about. And to that point, Melissa's got a really great observation here that I really haven't seen asked. Given all the attention of Elon Musk and his Doge efforts of government efficiency and all that kind of good stuff, is there any conversation you're seeing anywhere that Musk or others are going to turn to blockchain to improve government transparency and efficiency and so on?
Yeah, 100%. There's already been discussions about that by Musk and others. And actually, we've seen this in other countries abroad. One challenge you have with government documents is knowing that they are true and that they aren't edited over time. And so one thing we've seen countries doing in sort of challenged environments is publishing the raw results of votes on blockchain. not blockchain-based voting, which I know gives people the willies, but just stating what is true at this point in time in an indelible fashion. And I think you're going to see governments start to do that to build trust, just to take documents, put them on the blockchain, say this is true as of right now, and then not be able to change them 5 years from now when they get sued in court. And that level of like demonstrated trust, I think could be really good for the country and also open people's eyes to the things that blockchains can do. So again, you're already seeing this abroad on some aspects. I think you'll see it here in the US. And I think Musk is going to push us in that direction because he recognizes the unique things that public blockchains can do.
One of the frustrating, probably the most frustrating element of the ETFs, I think you're going to agree with me, but you'll say, when the SEC finally said yes to you a year ago for the Bitcoin ETF, spot Bitcoin ETF, they said no to in-kind contributions and distributions. That was the most frustrating thing in the approval, wasn't it?
It's just wacky. It's just wacky because it just makes them more expensive and less efficient.
And it's annoying to taxpayers who would ordinarily transfer their Bitcoin into an ETF, now are forced to sell it and give you the cash, incurring the tax along the way for absolutely no benefit to the investor. So the question therefore is, do you see Trump and the new SEC chair changing that rule?
Yeah, I absolutely do. I think that will change in short order. I think that was, if I'm being credited to them, they wanted to, crawl before they walk. And that, I guess, was walking. But it really only creates negative externalities. So yeah, I expect that will change in relatively short order. I don't think there's anyone who's against that at this point in a position of power.
I mean, let's keep in mind, we can do this with just about any other asset class of ETFs, right?
And we've been doing it for 30 years without an issue. Right. So it's again, it's this time it's different issue to raise. Like, why would it be different? It's not going to be different. It's just going to make them slightly cheaper, slightly more efficient, and more tax efficient for investors.
But here's where it's a big deal is for the advisory community, because the advisors in many cases can't help their clients who own Bitcoin directly in a wallet in some DeFi account. But by enabling that client to transfer the Bitcoin in kind into an ETF, which the advisor can manage, now the advisor can do a better job for the client of managing that asset, bringing the assets in-house under the AUM, lowering the fees for the client who would otherwise spend Lord knows how much to trade it at Coinbase or some other platform. So this is a big issue for advisors, a big win that would improve their client service and increase their AUM at the same time, no?
Yeah, I think it depends on how these in-kind creations turn out to function, and we will see. But it will be an opportunity. I will say that right now there are ways to do that through SMA accounts that I think many advisors are finding helpful. So if that's something people are interested in, yeah, please again reach out. We'd love to talk to you about the SMA style approach to that problem.
Well, elaborate on that point then, Matt, because if it's already available now and most advisors are unaware of it, talk about the Bitwise SMA that you have through Eaglebrook.
Yeah, we have SMAs through the Eaglebook platform. They allow you to do exactly what you said, which is bring in assets that are held externally without triggering a tax event so that they can be managed by an advisor, so you can fee on them, so that you can guide behavioral action in a correct way. And over time, potentially, so you can diversify your exposure. So we love to work with advisors, particularly with high value accounts who want to bring, assets that are outside of their business into their business. It's been hugely successful.
One last question for you, Matt, and that has to do with one of the hot new topics that people are not seeing yet in the real world, but they're anticipating, and that is indeed real world, RWA, real world assets. Explain to folks what that is, asset tokenization, and when you see that becoming a real thing in crypto.
Yeah, well, I mean, it's worth starting with how bad our existing systems are, right? There was a headline in Bloomberg earlier this last year that said U.S. stocks settle in one day for the first time in 100 years. And think about anything else in our life that we're just catching up to where we were in the 1920s. Like it's simply absurd. So tokenization is the idea of using blockchain-based rails to move all sorts of assets, securities, bonds, private companies, art, etc., to
Car
create
titles.
car titles, to create a tokenized representation that can move at internet-based speeds. I think it's inevitable that we will get there. I suspect it will take longer than most people think, though.
When you say that, you're talking years.
Yeah, I mean, look, I think we'll see significant growth in the next few years. And I think by, 5 years from now, this will be a dominant way that things move. But I also expect this to be a space where it makes so much sense. It seems so intuitive. It seems so easy, but the underlying plumbing is hard to change. So I think it will take some time, but we will see significant growth and big businesses built in this space, and it will long-term be supportive for assets like Ethereum and Solana and others.
This has been fabulous content as always, Matt. It's always a treat to have you here. Bitwiseinvestments.com is how you reach Matt and his team. They have a network of advisors and wholesalers all over the country. Somebody not far from you who will come to your office and chat with you on the phone, however you wish, to get you the questions answered for you to figure out how you can allocate in this asset class to your clients. Matt, thank you so much for joining us today on this conversation. Tomorrow, we have another webinar for you on a totally different subject, annuities. Frankly, how to create lasting income without them. Everybody's focusing these days on guaranteed lifetime income. You're going to discover that you can accomplish this without annuities. It's going to be a fascinating conversation for a topic that is very much of interest to your older clients. So I invite you to come visit with us tomorrow at 2 o'clock Eastern for that conversation. If you are interested in learning more about the new spot Bitcoin and Ethereum ETFs, download our two toolkits. We've got white papers and articles, infographics, and a cool chart that lets you very easily examine all of them, and you'll see just how well Bitwise compares to all of the others. And my new white paper that you've got the ability to download already, the 6 Mistaken Beliefs Keeping You from Investing and Recommending Bitcoin. And if you want to learn all the availability of products, services, news, feeds, you name it, check out our crypto catalog at DACFP.com. And got to tell you about our Vision Conference. Matt will be there. It's going to be June 9 to 11 in Dallas. It's the longest running, largest crypto event exclusively for financial advisors and accredited investors. 2.5 days of deep dive content on the latest that's going on in the world of crypto. And if you really want to become expert in all this, you need to get your CBDA designation, become certified in blockchain and digital assets. Online self-study course, you get 18 CE credits. You'll learn not only how the tech works, but you'll learn how to integrate it into your practice management. Thousands of advisors from 37 countries have obtained their CBDA. And coming up at the end of this month, our Wealth Management Convergence. This is a broad-based investment strategy conference for advisors, going to be just outside Miami at the end of February, the 24th to the 26th. Love to see you there as well. And if you haven't yet read it, my Amazon #1 bestseller, The Truth About Crypto, available everywhere. Matt Hougan, thanks so much for joining us on the program today. You're terrific as always. Look forward to seeing you again before too long.
Thanks for having me, Rick.
Thanks, everybody. See you tomorrow.